this is the most popular question that we're getting at the moment. And that question is, how much do I need in super to justify or to start an SMSF? So, I've got, you might be able to see that nifty little spreadsheet in the back behind me. That's one of our tools that we share in the Become an SMSF Millionaire course. So I'm going to give you a bit of background into how much you do need to justify an SMSF or in general, and then I'll give you an example as well using this nifty little tool. So in general, the rough guideline for how much you need in super between all members in your self-managed super fund is about $250,000 or $250,000. Now that can be up to 4 members of your family all added together. Another thing to check is a lot of people have more than one retail fund. So if you haven't got a self-managed super fund yet, a lot of people will have, if they've had 2 or 3 jobs over the last couple of years, they'll have a different super fund for each one of those jobs. So it's great to check when you add up all your balances together as a family. You might be really surprised with how much you actually do have in super. So it's a great exercise to do regardless of if you want to look into a self-managed super fund. Now, $250,000 is a rough principle, but there are people who do set up self-managed super funds with less than that. Now, the reasons they might do that are they want to use their super fund to borrow is one of the reasons. So they want to borrow to buy a property in their self-managed super fund, which is a really great strategy to save tax as well. Now, the second reason why people sometimes start an SMSF with less than that amount is if they're looking to invest in alternate investments like gold bars. If some people think the world's going to end, they want to buy silver and gold bullion. It's it's a really cool thing that you can actually do in your super fund. And also the third thing that people might set up a self-managed super fund with less than that balance is because they're going to contribute a lot of contributions to their fund in a short amount of time. So they might only have $150,000 in there now, but with their 4 family members, each contributing $25,000, they're going to have another $100,000 within 12 months' time anyway. So I'm going to give you a little demo on a fictitious family if you wanted to have a look at this spreadsheet as we go through. So we need a name of the first member of the fund, which we can make that Donald Trump. He is, I don't know, he's probably in his late 60s, so 67. And Donald will be earning, I'd say, in excess of $180,000. So again, this is a tool we share with you in the course that is a little bit of a 5-year planner and gives you a bit of guide whether an SMSF is right for you. So Donald's current super balance, that's the next question here. Let's say his super balance is $200,000. And Donald, he can contribute a maximum of $35,000 in this next financial year at his age. And so he's going to contribute that full amount there. Now, he needs another member of his fund, and I forget what his wife's name is. I think it's something like Melania, that's her name, and I'm guessing she's 20 years his senior. Let's put her as 47 years old, and she might be earning $80,000 to $180,000. Now her balance might only be, let's call it $75,000. And also she's got a job, she's working at the moment, and her employer contributes 9.5% of her salary of $100,000, let's say. So $100,000 times by that 9.5% gives us $9,500 that her employer is contributing on her behalf. But she wants to chip in a little bit more, and she chips in an extra $20,000. So the Trump family, or just Mr. and Mrs. Trump, are going to contribute in total $64,500 in their first year. They've already got $275,000 in their superannuation funds at the moment. And so in this example, they're choosing to open a self-managed super fund because in total, in the first year, the first 12 months right there, they're going to have just under $350,000.
Cool. So the tool gives you a little green light, does it?
It sure does. Now that's not hard and fast, and this is general advice only. You do need to speak to someone, an advisor, if you.
Like you.
That's right. If you want to do this stuff, it's it's not something you just 250 grand, I got it, then off and do it. Make sure you talk to someone who looks after this stuff.
Awesome. And what's the tax savings on this sort of thing? Can you show that?
Yeah, sure can. So I'm not going to show the tax saving on Millennia's. So Millennia's employer has to give that $9,500 to super.
Yeah.
But she has the choice whether she wanted to chip in that extra 20 grand. And Donald, let's say he is a business owner, he doesn't have to pay himself super because he's not an employee. But he wants to choose to do that 35. So that 35,000 for Donald plus Millennia's 20 equals 55,000 in optional super, let's call it. And that's actually a tax saving for the Trump family. So that the tax saving on the extra contributions is $16,700. So it's actually a pretty good tax planning tool as well to contribute that extra cash to super. Well, if you want more information on self-managed super funds or if they're right for you, just have a look on, we'll put a link below to our Become an SMSF Millionaire 12-week online course. And you can ask any questions you want. You can get access to this spreadsheet and plug in your own numbers as well. And yes, I'll see you on the next Facebook Live.